what's going on, everybody? Welcome to JMac Investing. I'm going to take a couple minutes here. I made a video on how to sell covered calls using Fidelity. Now I'm going to go ahead and show you how to close out an option, a covered call. Again, I think too many people in that first video a lot of people were getting too tied up on the particular security I was using. That was just demonstrative purposes. This as well. I opened up a covered call this morning. I have 100 shares of Fisker, which is ticker symbol FSR. Okay, Fisker Inc. You can see it right here. And so, like in the other one, it was Blink charging, and that, now that stock prices went way up since the price of that video, and people were too hung up on that. So with covered calls, it's really just a way to create income into your portfolio, almost like dividends. So Fisker now has weekly options, so I could sell this every week, and as long as it did not hit the strike price, I could close it out before, or I could just let it close itself because the strike price didn't get hit. So in this case, I sold the covered call this morning for $49. You can see right here the cost basis of me selling it was $49.31. It was 50. It was 50 cents a share is what it actually was, and then they take out whatever, it's like 69 cents or 60 cents or something like that for every option that you open or close. And so they're not free trades but just buying the stock. So there's a little bit that comes out. So I made $50 minus the transaction fee, and now Fisker has went down some. It was way up this morning. That's why I bought it, and that's another strategy that you can look into, is selling these cover calls on a real hot day when the stock is going up. That's when you want to sell, because you get more premium for that particular security that you're selling, or that stock that you're selling a covered call on. Okay. But now let me refresh this. So see, now it's cheaper because the stocks went down, so I can sell out and I'll pocket the difference. So I sold it for $49.31. I can close it out. So you just basically click on it to get to the option chain here and options. And so to close it out, what you're going to want to do is go here. When you sell it, you do sell to open, quantity 1. But when you want to close it out and buy it back, you would select buy to close. Okay, and the expiration is already selected because this is that option that I have open. This covered call I have open. So you'd put quantity 1, and then you select your price. Let me refresh this one more time. It's just going back up now, so I want to probably close it out real quick if I'm going to make any kind of gain on it. So I'll buy it back I'll try 38. Try 38, okay? So let's see. I'm gonna buy it at 38 cent. Preview order. So buy to close. I'm buying back the covered call at 38 cents, which is $38, and place order. Very good. There you go. So now I'm looking to close it out. Let's go to manage orders, and so it is still open. Let's take a peek. You can click replace and open it back up, and see, it's going up. That's why. So let's go to 40. Preview order. I'll try again at $40. See if it gets closed. So yeah, so there's no buyers right now at those prices. Keeps going up. So this will still have me in the green, and since this is demonstrative purposes only, there you go. All right, we got it filled. So it filled at 42. Like I said, I remember just this morning, a couple hours ago, I opened it up and sold it at 49 or at 50 minus the transaction fee. So it's $49.31. So I just sold it for $42 total. So I made $7 in a couple hours. So, but like I said, I could have just held on to it, and if it did not hit the strike price of it was 18, I think. Yeah, 18. Then I would have just pocketed the whole 50. But just showing you that I could do this, and I could keep opening and closing the calls. Each time there was margin to be made after I open up a covered call, you could take a peek at it, and if there's some margin there, you could close it out and then reopen it. Like I could right now go back, and now that that is closed out, I could open up another covered call on Fisker Inc. again right here in the same day and do it all over again if I wanted to. I'm not going to, but that was just illustrative purposes, and you can see the power of having covered options, because they're just safer. There's more security, associated with it. So that's how you close it out. It's buy to close when you're closing them out. Now I have no open options, and like I said, I just opened it up this morning. So I hope that helps you out, and you can utilize these covered calls, buying and selling them, and generate income into your portfolio. So if you're enjoying the content, do me a favor, hit that like button, subscribe if you aren't already. Also turn on the notification bell, and also consider joining the Patreon group that I have, which has a private Discord. And when I make moves like this, buy or sell stocks, open new positions, things of that nature, you'll know about it, because you'll be in my private Discord, and you'll get notifications about it. So, and also it's just a great group of investors where everyone shares knowledge, and so consider doing that. Also consider picking up some free shares from Moomoo, which is offering up to 4 free shares depending on how much you deposit when you open your account. Also have links for WeBull and also M1 Finance, where they also have offers running right now to get free shares or free cash with M1 Finance. So I appreciate you guys tuning in. Until next time, guys, that's all I got. Deuces.